All right, and welcome back for the episode of This Week in Charts via Carnival Trades and Wall Street for Main Street. If you've not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find Jason on Patreon. Come find me on carnivaltrades.com for swing trading alerts, analysis, and live day trading. Anyways, let's get into it this week. So we had a holiday shortened trading week this week here. We obviously talked about that last week. And it was definitely a unique week. Last week I talked about the likelihood that we would continue to kind of consolidate here or maybe pull back a little bit and then kind of inch up to new highs. And long story short, it would be an injustice to say this simply, but I think we're on that course here. But it doesn't tell the whole story. So last week we had that little reversal candle on Thursday. I told you guys the market was not likely to break out on NVIDIA earnings. We just had not done enough consolidation on the charts to do that. And we bounced Friday, Monday, flat day, and then really bears got some control as we got towards the middle of the week. If we look at the intraday kind of makeup, you can see here there's Monday, Tuesday we gapped down, just went sideways, Thursday down, sold off into the close, and then today, Friday, we gapped higher on the PCE number, which was essentially flat. It wasn't flat as in expectations. I think it was 2.8 was the headline, but we did sell off, and this is kind of what happens before a move is made. They need to grab some liquidity. So even though we had a kind of a quote-unquote bullish print, we still sold off into the 5200 handle and just pierced that a little bit before epic. This was an epic squeeze. So from the morning, 5250 down to 5190. I think the futures actually was about 70-point move. And from about 12 o'clock to the close, we went from 5190 to 5280. In fact, the futures here as we're closing on Friday, they actually went up a little bit higher. It was actually about a 100-point move. So 5205 to 5307. Yeah, so a 100-point move. An epic squeeze. Very, very nice move. And I do think the markets are poised to move higher. But I'm going to talk about a lot of things here. So we had some more earnings, more chip earnings. Take a look at this. MRVL. We'll get rid of this fib here. They got dumped on earnings. Dell got dumped as well. Salesforce. A lot of these companies, MongoDB. This one got dumped today. So a lot of these tech and kind of chip plays, although Salesforce isn't really a chip play, but really MongoDB, same thing. But either way, these kind of high flyer chip plays got hit pretty hard, although Salesforce coming off the lows. That really brought down tech this week. You look at the triple Qs here. That took the worst of it. That did finish down today 84 cents, although it did hold support here by the end of the day. As you can see, we closed above that. But from what I can see, there is a little bit of rotation going on underneath the hood. So things like NVIDIA, it did pull back a little bit this week, although it finished higher on the week still. But this sort of came in. Microsoft came in as well. Again, it closed green today, but it was down very sharply earlier, and essentially it was only flat. We had Amazon pulling back this week, Meta, Google. The list goes on here. I think even Broadcom. Yeah, Broadcom down for the week. So big tech getting hit. I think, yeah, Costco. Yeah, Costco reporting earnings. That was down today. But not that it's a tech play, but it's, I think, number 10 in the NASDAQ 100. But either way, tech getting hit. Market was down sharply the last 2 days, but we recovered. Why is that? I noticed this yesterday, and I talked about this very publicly. Talked about it with members too. And we were expecting a pivot in late May, and I think we have that now. But either way, take a look at the Russell 2000. So last 2 days, we were green. Here's the intraday. Look at these other sectors here. You guys know I talk about this every week. I don't like the transports, but guess what? Last 2 days, they were up nicely. XHB has been weak lately, up last 2 days. VNQ's weak, but it was green the last 2 days. So seeing some rotation out of tech, I think, these evaluations, I think investors are finally starting to take profits here. We've talked about this with NVIDIA, Stan Druckenmiller moving out of those NVIDIA shares. He still has a smaller position in it, but he sold off about 71%. And what did he put it into? Does anyone want to take a guess? Call options in the Russell 2000. Now, this was back in March, so it's been some time since then. Maybe he closed them out. I doubt it. He had 15% of his portfolio allocated to it. So are we seeing some rotation here? We finally seen the market move on from chips. and move into other sectors. That remains to be seen. But I do think that bottom line, we have a nice pivot here, very good reversal. We were able to close back above the all-time high, the previous all-time high, that is, by the end of the week. And we closed inside of last week's candle, despite at one point today, at about 12 o'clock today, we were down here. So there's last week's low at 52.56. We were at 51.91, and we closed at 52.77. So pretty epic reversal here, and been telling members to look for that around end of May. And we've done very nicely on that. So anyways, Qs here, again, same kind of deal, closing back above the previous all-time high. We did have an outside week, to be fair. I think tech will be under pressure here. That doesn't mean it can't go higher, but it'll likely be a laggard, specifically the semis. Even biotech, I think, could be interesting as a catch-up play. Again, that was green the last 2 days with the market getting hit. So not all technology. I think even cloud, which we'll talk about in a second, could be a catch-up sector, at least certain stocks, not all of them. But yeah, technology likely will remain weak here, at least on a relative basis. Resistance is still 460. Support here, it got very close to 442.50. I was kind of hoping it would get there for a buy today, but it didn't. It got very close. But this is still your near-term support here. If we start somehow come back down, you know, the 433 area on the Qs is your next level. The Russell here, again, a lot of chop, a lot of noise, but still 210 to 212 is your big level. We get above that, that's on breakout. So IWM holding up back below 200 puts the bears in control in the short term. But as long as we continue making these higher lows here, IWM is good. The Dow was heavily skewed this week to the downside on, well, really yesterday and Wednesday. I almost said Tuesday because of the short week. But it took a big hit because of CRM. So CRM made a big Dow component. CRM was down big, but big bounce today. It was very oversold in the short term. So good bounce for the Dow. Again, we'll go back to about 350, or 350, 392, 393 as short-term resistance here. And then support is still down here around 378. Semiconductors did back off. They did come off the lows, though. You can see, actually, if you know your candlestick patterns, that's an evening star. So rally up, gap up, lone candle, and then a reversal. So good reversal there for the semis, but they still, you know, finished not that much down for the week. And again, we still closed above that pivot high from March. If you follow the SOX, which doesn't have as much of a weighting in NVIDIA, it technically closed below that. So SOX a little bit weaker, but it still held the moving averages by the end of the day. So maybe a little bit more backing and filling. I would like to think that that would be the case for these AI high flyers, but they're still holding up right now. Now, IGV took a really good hit, but it had a nice reversal with everything else. Today, take a look at the intraday. Big rally off the lows and closed at the highs of the day. So on the weekly, you held the 50-week moving average. So if that can close back above this trend line here, I think it's in pretty good shape next week, rather. Again, transport's a laggard sector turning to a leader. So up 1.5% today, and on the week, you know, up about 200 points. But that's after testing, you know, new lows. So DJT hanging in there and holding up decently. Interest rates here. So starting off on the 2-year, excuse me, as always, we went up into the 5 handle like I talked about, and we did roll over a little bit over the last couple of days. So right here, anybody who was buyers in this area looking for a move up, they got bagged. Right, so now when you go back up there the first time, they're going to turn into sellers. And that's true for the 5s, 10s, and 30s. That doesn't mean you can't come down and put a higher low and then go higher. It just means that first test is likely going to get rejected. And so we did see rates back off. Again, PCE was right in line with expectations, so it didn't really move yields that much. And I think that the short bond trade's a little crowded in the short term. I'm still a cyclical bond bear, as you guys know, but that doesn't mean that things can't have rallies, right? So don't think that that can't happen. And just to kind of further the point here about cyclical bond bears, take a look at this here. You know, look at all these prices here, and stock prices, house prices, gold, consumer, versus the TLT in pink there. In fact, I can just, if we want to, we can just do this. We'll look at an all-time. We were talking about this, I think I tweeted about it a week ago, but this is like one of my new favorite charts here, just because it just illustrates. So TLT, since it's in inception, is up, what, $1? Oh no, sorry, it's up like $9. That's insane. That is wild. And that unwind happened in what, 2 years, 3 years? So just incredible stuff here. All right, let's get back over to this. XHB, again, laggard sector, leader sector into the end of the week. Still has higher lows. VNQ, laggard sector, leader sector into the end of the week. Good bounce. I don't want to make too much out of those right now. XLF, good bounce. 60-cent gain today. Still got resistance at 41.72. That's kind of a point of control right now, but you have higher lows. KRE, good bounce there. Still on the weaker side, but it's getting a, it got a good bid into the end of the week. KBE, I like a lot better. The weekly chart is still pretty good despite the sell last week. We finished flat this week, and the pattern's firmed up. So KBE holding up, broker dealers holding up. It's overbought on the monthly, but still strong. So now into commodities, everybody's favorite sector. So oil down 73 cents. Again, that 80 handle, I told you guys last week, that's been so stiff. They tried to pierce it on Wednesday. We got up to 80.62 and then came back in. So they're still selling. There are a lot of oil shorts. I don't have the chart in front of me, but it was on Zero Hedge yesterday. There's a pretty good uptick in oil shorts right now. So I think if they try to break this down, it's probably not going to. Is it going to squeeze heavily? I'm not so certain of that. You guys know I don't see this going that much lower. Still a energy bull in the long run, but we're kind of doing this big ping pong here. 74 is support in the near term if they try to break it down. For a short-term trade, it depends on how much we consolidate before we get there. As far as me wanting to buy it, if that breaks, then it's down to the low 70s, 70 to 71. I don't see us getting below 64 ever, unless there's like a flash crash or something. But oil in the range. The weekly, I'll say this. Let me just get rid of all this stuff here, so we can draw this in, just to get a more macro view here. You do have like a tightening range. So be aware of that. Tightening ranges lead to expansion. Which direction remains to be seen. But I don't see us, again, if we do somehow slice below this, I would be looking to buy for a much, much, much longer term move. Buy with both hands. So we haven't looked at the bigger picture in oil in a while. I just wanted to make that clear. One thing I like about oil is that XLE was up 2.5% today with oil down. And it was up the last 2 days with oil down. A lot of this has to do with rotation, like I talked about. Laggard sector lately getting a bid. Is this the low? I don't know. It might be. It might be, right? So we pulled back right into the weekly 20 MA. And you're seeing here, take a look at these moving averages. See how they're expanding? So they're tight right here. We'll just do some education here. So see how they're tight, indicating lack of trend. And then as you move up, they expand, and you get the 20 above the 50, 50 above the 100, 200 well below all of them. As long as that holds, this could go higher. So that could be a dip buy, and I do think this is one of the sectors that will catch up to other things. I would have really if it got to 87, I would have bought the heck out of it. I told you guys that flat out. And I still think that if that gets there, I would like it, but I'll watch this for pattern. So it could be something. But weekly is still okay. There's the XOP, same kind of look, right? And then the OIH, which is still my favorite, a little bit softer this week, right? More of a flat angle over the last 5 weeks or 6 weeks versus the XOP and the XLE, which have that steep angle, which I like. But it'll trade where they trade. I think this is going a lot higher in the long term. Anyway, let's flip over to uranium. CCJ holding up. Nothing has changed. I tell you guys this every week. Trend is up above all the moving averages. Weekly trend is up above all the moving averages. this can go higher. URNM, the daily's a little bit softer because we pulled back and now we're kind of sideways here, but the weekly, again, there's nothing wrong with this. So still pretty strong there. And I know if I don't cover the NJ, somebody will say something. So again, strong trend, same thing. All right, nat gas here. So we did get a contract flip there onto the end. We actually traded this in the trading room today. Made us a quick buck off of it. I think nat gas will probably get one more bid into early June, and then I think it's probably going to be done for the summer, unless you get, you know, exogenous moves. I will say it is I always get it mixed up. It is El Nino. That's the worst one. Somebody's going to correct me in the comments, I'm sure. Thank you in advance. But I tell you, in Florida here, it's already, we broke a record for high temperature high 2 days ago. It's already like pushing 100 here, and it's May. We're not even into storm season yet, so we could get some. It's looking like we're going to get a pretty good storm season. Does that mean that, I don't know, you know, we could get shocks is what I'm saying. And that's for the whole Gulf. It's for the whole southern area. So that could happen. But outside of that, nat gas, I like this level here. You see the 618, the prior breakout area, and you got a bounce there. How high is the bounce? I'm not sure. I'd say it's not going much past 3, unless, again, an exogenous move happens. But I think it's likely going to cool off for the summer, no pun intended, and then it can move up again in the fall if it wants to. But good bounce there. Dollar index, again, nothing has changed. It was just sideways this week. I technically have a buy signal on this right now on the weekly. We'll see if it holds up. I don't think that's going to be too problematic for stocks. I mean, if you look at the dollar on the year, it's gone up. And, you know, looking at SPY, for instance, it's gone up as well. So no problems. Oh, and by the way, gold has gone up, right? So there's other dynamics. Don't think that dollar up has to mean stocks down and vice versa. But if this dollar starts to curl up, again, let me clean this up here so you can see. Well, I mean, there's a trend line break right there, but you know, look at this. Again, like oil, it's tightening. If that curls up, that can go higher. And you've done enough consolidation, right? This was a lot of resistance with this red bar right there. We couldn't get through it. We've done enough consolidation and enough time there that we can go through that. So just some things to keep an eye on. Oh, by the way, one of the like big bear cases I heard this week was, well, the dollar yen. But if you listen to Jason and I, we've talked about, it looks like it's not that it looks like. I mean, I'm certain they're doing a currency swap already. Why do we know that? Because the wordage that they've used. It's the United States and Japan have agreed on yen intervention. What does the word agree mean? Well, it means that Janet Yellen or someone representing the Treasury said, look, you can do this, but you're not selling our bonds, right? I mean, that's what I would get from it. I wasn't born yesterday. I don't think you guys were either. So we'll see. But in any case, dollar's still holding up and no problems there. All right, gold here. So I think gold is continuing to back off a little bit. Again, it might have to do a little bit more backing and filling to do. But as long as, again, look at the trend. So look at the moving averages. See how it's separating? As long as it just holds up, you know, it can pull back, it can do whatever. It can go sideways, but I think it's just a matter of time here. So nothing really wrong with it. Nothing wrong with consolidation after a big up move, by the way. Take a look at this here, XME versus SPY. It may take some time for this to happen, but it's been in that range for a while. So I think that can happen. Maybe not right away, but perhaps in the next, couple of years. But anyway, gold holding up, but it is pulling back. Let me just cover GDX. A green week, but kind of flattish today. Silver here, still chopping around and consolidating. I still think it wants 35, and then I think that would be stiff resistance for now. But it is silver, so it tends to overshoot, so just be aware of that. But, doing some backing and filling. Platinum, still same thing, backing and filling, but holding the 20 moving average. We'll see what this does here. It's a little bit thinner, so it's harder to gauge, but it's had a nice rally. Palladium's still stuck in the mud here. That had a contract gap too. I still love it down here as a long-term hold. And then copper, 460. I like this for a bounce. So I'm getting that from right here, pivot high, previous breakout area, and it is holding that that area right now. So I think bounce next week. If it heads lower, I think 425 is a much, like you could get a serious multi-week, you know, trade off of that that level. So pivot, broke down, retested when we broke out. If that gets retested again, it's likely going to hold. But look at the weekly again, just really ahead of those moving averages. It needs to consolidate. All right. Lastly, Bitcoin, relatively quiet week. So I'll go to the daily, and I still think this can get to 74.5, 75. But it did not do anything with the spiders this week. So if it backs off, we look at 63. I think that holds. But I'd like to see it stay above that green bar on the daily on a closing basis. ETH is the real winner right now. Again, enjoying that ETF news. Again, if this moving average catches up to price, it can go higher. And obviously that would be a tailwind for the whole sector. All right, so again, very good pivot reversal here for the markets. Again, I'm expecting higher prices throughout the summer here. Trend is pretty strong, doing lots of liquidity injections into this market. And as long as we see rotation, tech can come in and consolidate and sell to an extent. As long as we're seeing that rotation to those other laggard sectors, I think those laggard sectors, again, transports, small caps, biotech, energy, regional banks, REITs, stuff like that. I think those can, as long as we see that rotation continue, those can be the stars of the summer here as tech maybe takes a backseat role. But again, bottom line, so we get a, unless we see a high volume reversal, right? This one was not with high volume. I'm going to continue to defer to the trend here, which is up for this market. So anyways, guys, I'm going to wrap it up here. You guys take care. Don't forget to come find Jason on Patreon. Come find me on carnivoretrades.com. I'll see you guys all next week.